Hello and welcome to The Trade. Well, before we get to the charts, let's take a look at what's making headlines. Tesla Chief Executive Elon Musk scored a resounding victory as shareholders approved a pay package of as much as $878 billion over the next decade, endorsing his vision of morphing the EV maker into an AI and robotics juggernaut. The US economy shed jobs in October amid losses in government and retail sector, while cost-cutting and adoption of AI by businesses led to a surge in announced layoffs, with those layoffs at the highest level in 20 years. China has begun modest purchases of US farm products after the leaders of both countries met last week, but traders still await significant soybean buys after the White House said Beijing pledged to buy 12 million tonnes by the year end. And Saudi Arabia, the world's top oil exporter, has sharply reduced the price of its crude for Asian buyers in December, responding to a well-supplied market as OPEC Plus producers ramp up production. Well, let's now turn to the charts with a focus on commodities, including soybeans and oil. I caught up with Rich Weisman from Weisman Consulting and began with a look at gold.
Yeah, this is actually a real healthy pullback. I think everyone got surprised in how quickly it broke the 4,000 level and how far above it went. Even I was surprised that we hit 4,400 area. So we were definitely deserving of a correction. We're seeing a little bit of, I put a weekly view so that you can get a longer term, somewhat longer term view of the chart. And this is nothing but a healthy correction. I know the bulls won't want to hear this, but we could still be in a bull market even if we went all the way down to the trend line support, which changes every week. Right now it's coming in at around 3,550, 3,600. And even that the highs from the first quarter should act as support, and that's all the way down at 3,450. All that said, I still think we are destined for higher ground. 4,400, probably by year end, 4,500, and outside chance if we went parabolic again of 5,000, although we're running out of weeks to do it. But year's coming to an end.
But of course, we did breach that parabolic rise there. So, I mean, was that sort of inevitable that we were going to get the pullback? And I guess, the question is, where to from here? So you think the bull market is still very much intact?
Yeah, this is the thing about trends, is that they last longer than anyone expects. And I do not think that was the end. There's some things about outside markets. Silver had never been able to get above $50 a barrel, $50 an ounce. That goes all the way back to the 1970s, and we broke 50. So that suggests that there is another leg to this precious metal rally, and we are not done.
So that's what we're seeing with precious metals. Richard, let's move to energy with a focus on crude oil. And of course, we have seen that downtrend. Does that remain intact?
Yeah. Last time we spoke, I talked about crude breaking, and we did break all the way down to around $56 a barrel, basis the North American marker WTI. That downtrend is still intact. I do think we still run to 56. I was hoping for $50 a barrel, but there's something going on in refined products where they're showing a little bit of strength. And I think that is slowing the rate of decline in crude. I'm not sure that we're going to break that trend line. That downtrend is still intact. We still, I think, are going to hit 56, 55. Eventually, either the refined product rally, especially in middle distillates, or this downtrend in crude is going to have to give. And my sneaking suspicion is it's going to be the rally in refined products.
What of policy, though, particularly in relation to OPEC Plus? It has pulled back on those its production forecast for the next quarter. What sort of impact does that have? Has that been priced in?
I think that there was a lot of geopolitical softening. In other words, that the Hamas Israel thing, and a lot of this talking with China, talking with India, talking with Russia. I think it was totally baked in that that everything was safe in the world and oil was going to flow, no geopolitical risk. I think this recent pullback rally that you had was a result of people saying maybe geopolitical risk is not totally off the table. That being stated, oil finds a home. Producers are definitely at the mercy of the need to bring oil to market, and that brings prices down, all things being equal.
And Richard, just finally, let's turn to soft commodities with a focus on soybeans for something different. Now, of course, this has been in focus, the market, because of that trade war with China. What are you seeing?
Yeah, I thought this would be an interesting one to bring to the program because it's a little bit off center, but it's definitely in the news. You can see that gap. That gap brought us above the resistance of 1080. And that signaled, in my opinion, a new bull market in agricultural commodities led by soybeans. I don't think the corn story is as strong, which is why I wanted to focus on this chart. But this one is, in my opinion, definitely a new bull market. New is an exciting thing for trend traders. It means there's a long way to go before it ends. I don't know where it's going to end, but a first logical target would be the round number $12 a bushel. So that's what I would look at. If we fill that gap, then all bets are off, and it was just a, short news related rally. But at this point, you have to go with the path of least resistance, which is up.
All right, once again, does this come down to geopolitics, given what's at play between the US and China? Is that what is likely to determine where this goes?
I think so. I think that our beans are cheap. The only reason why China wasn't buying our beans versus the Brazilian beans is the fact that we had a trade war going. And now we're talking about making things a little bit more warm and fuzzy between the two nations. And soybeans are on the table. Trump is beholden to Midwest voters, and that means supporting soybean farmers and grain farmers in general.
Richard Weisman from Weisman Consulting, and that is the trade.